Hi, this is Amy with the Bulletin Board Heroes here at Zach's Traders Cafe for Tuesday, the 22nd of October. Starting with the FTSE 100, which is bull trap through the 8400 area. We were suspecting that after three attempts over the last few sessions, the market was peaking out there and not, surprisingly enough, heading to the top of the rising trend channel from last year as high as 8700 with the budget obviously on October the 30th, and maybe one or two people think it's a good idea to sell now with lower CGT rates than after the budget. Anyway, whatever the situation is, below 8400 on an end-of-day close basis, we've got the risk of a test of the floor of the channel there towards 8220. RSI pushed on the wrong side of, or to the wrong side of neutral 50, which is not great, especially when it's combined with the failure of the RSI in the upper 50s, which tends to be a rather bad signal. Worst case here is we have to head down to the 200-day line at 80.50, but hoping that we can stay on the right side of 82.20. Next up is the DAX, and here the situation is that we did see a pullback from the best levels, and that's ongoing at the moment. 19,500, the old peak from September, and the risk now of maybe a move towards not only 19,300, recent support, but the 19,000 area, which was basically the early October support zone, and not far away from the blue 50-day moving average there. So let's see how that pans out. But while the RSI is above a neutral 50, still have the chance of only a mild dip and nothing lower than the 19,000 area. Moving on to the Dow, and here we have seen it near the top of that rising trend channel that we've drawn for it over the recent past. Here you can see that we backed off at the top of the channel there, 43,600, but hoping that we'll stay above recent support around 42,600 over the near term. RSI is double top there in the RSI window with the overbought 70 level, and that is obviously kicking in as a negative. Worst case at the moment, we have to head back down to 42,000, but I suppose still hoping that the 42,600 area will come in, as that was the old September resistance and mid-October support. Moving on to Bitcoin, where everyone and their mother waiting for the big turnaround or the big push through 68,000. So far, this market has managed to sort of bluff its way and have a bull trap towards that 70,000 area. Ideally, we have no weakness now back below, or sustained weakness back below the old September peak there, 66,000. Below that would then suggest the 200-day lines in place at 63,000. But maybe we can just about get away with the 66,000 area support, given that the RSI remains well above the neutral 50 level. Moving on to gold, which has been, well, there's no quibbles at all about the performance in the recent past. Here we've got that rising trend channel there since June, and steeper one from the one we had previously. The top of the channel there at 2,800, we're looking for that. Well, we were looking for that by the end of next month, but if we're really lucky, we'll get that by the end of this month, especially while we remain above the old September peak there at 2708. RSI in the overbought area now at 70 plus, but not overly overbought, if that makes any sense, and therefore still the scope for a move to 2800 before there's any pullback. Moving on to the stocks, and not many to shout about at the moment, but maybe Ananda is a stock worth shouting about. We're in this rising trend channel base here, rising trend channel basically. Floor of the channel there at around 0.28, and above that looking for the top of the range up towards 0.55 by the end of next month, driven by recent very positive news regarding the NHS, etc., etc. So it looks as though the company well on its way there. Moving on to Avacta, where it seems that we don't need any shorters. We have the company actually issuing its shares itself. 2 million's worth, I think, yesterday, and only another 30 million to go on the convertible loan. Falling trend channel here, top of the channel there around the 68 pence level, and below that there's a risk at least of the shares filling the gap down to the 52 pence area, which was the gap that we had earlier this month, the gap to the upside. Moving on to Castillo, which seems to be delivering decent news at the moment as well. Here you can see that we've got the shares basically in a rising formation, if I can get the right market there. And that is based on the gap higher that we had earlier this month. Support found at the top of the gap, basically around 0.31, and above that, looking for the top of that broadening triangle from this time last year as high as 0.48 pence by the end of next month. Just waiting for the 50 and 200-day lines to cross. It could actually be that we're in a run-up to a golden cross, which is a very positive state of affairs. Moving on to feedback, and here the shares bounced off. Well, there was a bear trap gap reversal. Shares bounced off the 50-day line there around the 48 pence level, and above that we're looking for the 200-day line initially at 73 pence and then up to as high as 90 pence by the end of next month. Rather high hopes there, maybe a bit too high, but at the moment the shares consolidating well after the initial spike. Insig AI is next with a rather strange chart, and here you can see why it's a rather strange chart with a sort of a triangle move there, and what we're looking for is the top of that triangle there from back in January, heading for 20 pence. We're looking for that by the end of this month. That's the main resistance for the shares. After that, then it should be hopefully a rather quicker ride up to 30 pence plus by the end of the year, so quite high hopes there for that situation as well. On to Kazera, and here the position looking decent within that rising trend channel from June. Top of the channel there as high as 1.8 pence, looking for that by the end of next month, while we remain above the floor of the channel, currently around 1.1 pence. Next up is MetalNRG, where the dust seems to have settled after the block-busting announcement that we had from the company last week, slightly nudging now to the upside within a rising trend channel that's heading for 0.638 pence initially, but if the company gets everything right in terms of communicating how good the deal is, we could actually get up to 0.9 pence, which is the upper parallel of that rising trend channel, the black one there, and head there by the end of next month. At this stage, only well below the floor of the channel there, around 0.41, really delaying the upside scenario. Moving along to Rome Resources, which looks as though, where it looks as though finally the market is appreciating the news flow that the company is delivering. We've had a gap through that resistance line and through the 50-day moving average, and looking for obviously a retest of the best levels, but also up to that triangle top there with the red resistance line there at 0.35 by the end of next month, or hopefully much sooner. Upside value while we hold the floor of the gap there at 0.26. On to a stock which I haven't looked at for quite some time, which is Scancell, and here we've got the potential of a rising trend channel, or rather wide one there. The top of the channel heading for 22 pence, which we're looking for by the end of next month after the recent bounces off the floor of the channel there and above a rising 200-day moving average. So taking the view there that 22 pence could be on its way relatively soon. Finishing off with the stock which has looked like a winner from very early on, actually, very low in the range, around the 4 or 5 pence level, and basically the Valereum in a rising trend channel there from back in August. Top of the channel there at 14 pence, and we're looking for that well before the end of next month. Ideally, we stay on the right side of 9 pence now, which was the initial October resistance. That's it from me today. More updates tomorrow.